Hey everyone, welcome back to Corporate Decoder, the place where we'll translate corporate jargon into plain English. And today we're looking at a filing that has some interesting moves happening behind the scenes, potentially increasing a loan much larger than we initially saw. Now this is a relatively short report called a Form 8K, and these are typically filed to announce major events that shareholders should know about. Think of it as a special bulletin from the company to the public. This particular 8K is from NextBridge Hydrocarbons Incorporated. If you are not too familiar with them, they are an oil and gas company. One thing to note right off the bat is that NextBridge Hydrocarbons is identified as an emerging growth company. This means they get to use certain relaxed reporting rules from the SEC. It is kind of like getting a temporary pass for some of the more complex financial disclosures. The main story here is in the first section. It is about a material definitive agreement. Basically, they've entered into something important that could affect the company's finances. So what is this big agreement? It is actually an amendment to an existing agreement called a promissory note. This note is for a 5% unsecured loan. Unsecured means there is no specific asset like a building or equipment backing the loan. It is based more on the company's promise to repay. And this is not just any loan, it is with Gregory McCabe, the chairman and chief executive officer, and also the company's largest stockholder. So it is an insider loan. Now here is the key detail. The original loan was for up to $20 million. But this amendment announced on the 7th of January 2026 increases that amount. They've extended the borrowing limit to a total of up to $25 million. So they've gotten an extra $5 million that they can borrow from their CEO. The audit committee of the board of directors did approve this, which is a good sign that it was reviewed internally. This section just reiterates the financial obligation. It is confirming that this extra $5 million is now a direct financial commitment for the company. And here you can see the actual document detailing this amendment. It is the 10th amendment to this note. It is important to remember that while this is a loan from a key executive, it is still a financial obligation for NextBridge Hydrocarbons. They will need to pay this back with interest. Now let's talk about what this actually means. A company increasing its debt, even from its own CEO, suggests a few things. It could mean they have plans for expansion, investing in new projects, or perhaps covering operational costs. Since this is an oil and gas company, they might be funding exploration or development activities. The fact that it is unsecured means the lenders, in this case Mr. McCabe, are relying on the company's overall financial health and future earning potential. The fact that they're going back to the well, so to speak, and increasing the amount indicates they likely see a need for more capital. On the surface, this looks like a pretty straightforward loan increase. However, we always have to consider the insider aspect. While Mr. McCabe is the largest shareholder and presumably wants the company to succeed, loans from insiders can sometimes raise questions about the terms and whether they are truly at arm's length, meaning fair to all parties. But in this case, the audit committee's approval suggests some level of oversight. Looking at the broader picture for NextBridge Hydrocarbons, they are in the energy sector, which can be very volatile. Factors like global oil prices, geopolitical events, and regulatory changes all play a huge role. Increasing their debt means they're taking on more risk. If their projects don't pan out or if energy prices fall, repaying this larger debt could become a significant challenge. On the flip side, if they're promising opportunities that require this capital, it could be a smart move for future growth. What is notable here is the lack of detailed financial tables in this specific filing. This 8K is focused purely on the announcement of this loan amendment. To get a real sense of the company's financial health, you'd need to look at their more comprehensive filings like a 10Q for quarterly updates or a 10K for annual reports. Those would contain the income statements, balance sheets, and cash flow statements that would really tell us if they can handle this increased debt. For now, this 8K tells us NextBridge Hydrocarbons is securing more funding, and it is coming from its top executive. Whether this is a sign of ambitious growth or a potential stress signal depends heavily on the company's future performance and the broader energy market. Alright, that is our breakdown of this NextBridge Hydrocarbons filing. What is your take on this loan increase and what it could mean for the company's future? Drop your thoughts in the comments below. If you found this analysis helpful, smashing that like button really helps us out, and please subscribe for more corporate deep dives. Don't forget to check out the Discord community linked in the description for more discussions. Thanks for watching, see you next time.